Hey y'all, SniperTrader here. It is Saturday, April 13th, 2024. And today I want to show y'all some pro charting techniques that's great for beginners to learn because it's simple, it's easy, and it will get you well on your journey to technical analysis of stock charts. So yeah, let's get started here. I blanked my chart. I removed all drawings. I just have price action here. And right now we're on a weekly chart. That's what our start is, with the week. What you want to do, if you're using TradingView or whatever charting platform you have, if there's a magnet or any kind of snap to open, high, and low and close prices of candlesticks, it really simplifies charting. So what I like to do is I come in here and I grab me a horizontal line. I like this one because it extends right and left, and you can kind of prove your charting by looking back. So I count 4 weekly bars back, which is 20 trading days. I'll pop a line. And I usually label it. I call it the 20-day look back low. This is basically 20 trading days in the past range. And then I'll pop me a line on the high of the most recent 4 weekly candles, and I'll call that 20-day look back high. So now we have our 20-day range, and as you can see, the QQQ, which is what I'm working on right now, has stuck inside of its range for the past 4 weeks. Cut down to the daily. There's really not a lot to do here because it doesn't change anything, so to speak. Also on the weekly, I don't think it adjusts for, oh, never mind. So yeah, the daily doesn't really change anything because it's just days inside of the weeks or the weekly candles that we just charted. So I like to go down to 4 hour next. And when you do that, you start seeing some levels inside of the range, like this level here. If I pop a line on this bullish candle high right there, you can see it has multiple touches. It's been resistance and it's been support in several areas. So that, in my mind, is a good line. The other thing I like to do is if it's below price action, I'll turn them green. And if they're above price action, I turn them red. That's just my preference. Some people just leave them white or gray or whatever color you like, but this way I kind of know what to look for next. And then there's another level. this vicinity there. I can pop another line, say right there, looks pretty good. You can see we've got multiple areas of resistance. That level actually hasn't really shown any support yet. So I'm still going to keep that level because intraday it has meaning most likely. I do see another level possibly in here, but let's go down to a 1 hour. You can see sometimes I like to turn off the electronic or extended trading hours and just put it to regular. That way you know you're charting price action during market hours instead of after hours. So that looks like a really good level right there, this 444. So I'm going to put that there. It's been resistance several times and support. And just a level down here. That's kind of a level 2 right there, that 442. These interior levels would be good for intraday trading. If I go down to a 13-minute, look how that 442 really shows up. But yeah, you just start at a high time frame, draw your levels. They're pretty easy to see after you've done it for a while. You just look for multiple touches, on the downside and multiple touches on the upside. Your support and resistance lines. Some pros will mark the highs. I know some pros, the only thing they have on their chart is a VWAP or VWAP, volume weighted average price, and one moving average. And they'll have let's say they use a 1 minute chart for trading. The only lines they'll have on their chart are the most recent high and the most recent low, because that is all that matters in the current moment when you are day trading, scalping. These are your levels. As you can see right now, QQQ is right in the middle of that range, so it's probably not a good place to enter a trade. What you would want to do is look for something like this. You want to see it bounce off of your last low and then head back up to the next high. That would be ideal. Or it can, of course, come down and break through, at which point you would want it to find resistance there and go down for a short play. That's kind of how you do it, and it keeps your chart nice and simple. A lot of people will have tons of indicators and all that on their charts, and all it does is clutter the screen. You can't tell what's what. And if you just keep it simple, it will improve your trading. I can almost guarantee it. So that's all I have for now. I will catch y'all in the next video. SniperTrader is out. Thanks for watching.